and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly your queries during the show. So please keep commenting on our live feed and we'll have your questions addressed by our technical expert. But before that, let's see what the global handover looks like. European markets fell for a second straight day as investors focused on geopolitics and a big budget announcement in the UK. Wall Street slips and US Treasuries jump as investors digest hawkish comments from Fed members. Key indices end lower amid fears of more aggressive rate hikes. Meanwhile, Asia trades mixed with the SGX Nifty signaling a higher open for our own markets. Is the uptick in banking stocks here to stay in the Lal Street? We find out on the show. Individual stocks in the spotlight will be Bajaj Auto, Paytm, Ultratech Cement and Blue Dart. Okay, let's start off the show by looking at, or rather closely looking at the banking sector and the stocks that entail within the space. Ashutosh Mishra from Ashika Stock Broking joins us right now. He tracks the banking sector very closely. Morning, Ashutosh, and thank you for joining in. The big question is, why is the street so optimistic about the banking stocks and the banking sector? Because clearly some of these big guys have outperformed the market in the last 2-3 months.
So if you look at everything is working very positively for the banking sector as a whole. You are seeing the credit growth returning back. You are seeing the NIMs of the bank improving. Even on the yield front, they are getting more of positive news of late. And credit cost has come down substantially, which was the main issue which we were grappling with from the last 4-5 years. So if you look profitability in the second quarter, it was one of the best in the last decade or so across the bank. You look at private or public, and sustainability of this earning look for at least a year or so from here, and that's why investors are getting very gung-ho on the banks. We have never seen the type of ROA and ROE which SBI is delivering in the last 10 or 15 years, and this clearly indicating that sector has turned around, and now given the opportunity size, given the opportunity is panning out in India at this point of time, we are clearly seeing that this sector will continue to remain on the forefront of the market rally.
Okay. Another follow-up, talking about the turnaround that we've seen in banks, what has really stood out is the turnaround in public sector banks especially. Is that also here to stay?
Yeah. So what is important is happening in the public sector bank is that their credit cost has now got minimalized, which was the key issues for them for the last 6-7 years at least. Another important point has happened is that the difference between deposit and credit growth has widened in the system. So credit is going at roughly 17 to 18%, deposit going at 9 to 10%. And so everyone needs deposit to participate in this aggressive credit growth. And we all know the biggest positive point for the public sector bank is their deposit franchise. And that's what is playing in their favor at this point of time. If you look any of these public sector banks, their loan growth, they are dealing a very, very robust loan growth, which was missing not only from 5 years, but it was missing from the last 7 to 8 years. Post 2013, we have never seen these type of things. So till the time you will see this difference between deposit and credit growth remains a bit higher, which is currently there. Public sector bank will continue to get business. So that's why they will continue to generate higher NI. At the same time, they have a higher excess SLR holdings also from their old earlier year SLR holding. So they are also liquidating it. So you will see that NIMS improvement trajectory for the public sector banks will remain on a positive front, and at the same time credit costs remain benign. So together it will result into a very, very strong profitability growth for next year or so. And when we compare this with the private sector banks, probably in the private sector banks, we will find the rising cost of deposit getting reflected in their NIMs, especially from the fourth quarter onward. Probably third quarter, we may not see with everyone, but in fourth quarter, we'll see that start getting reflected in the private sector banks. So if you look at the incremental improvement, that is more than the public sector banks, and valuation-wise, still they are far cheaper of it. So at least for a year or so, the trade on public sector banks will continue.
Okay, well, that's heartening to know. Between private sector and public sector, do you have, a favorite as far as the sub-segment is concerned, or within the entire banking space, if there is any other segment that you like right now that you want to flag off for our viewers?
So within the private sector banks, at this point of time, our top preference pick is Axis Bank, followed by HDFC, and then ICICI Bank. These three are the pecking order in the private sector banks. When it comes to public sector banks, SBI is our top pick from the long time, and will continue to maintain it. But on a return basis, I see some of the large public sector banks may give better return than the SBI, like Bank of India, PNB, even Bank of Baroda and Canada, which has already participated very aggressively in the last few months. But stock-wise, we may see substantial improvement in the performance of Bank of India and PNB in the coming quarter. We don't have a currently active rating on this. Nothing has changed on a structural basis, but the way whole market is panning out at this point of time, the industry tailwind is there in their favor, and that's why we will continue to see positive result as well as positive, probably positive return coming in from these stocks.
Okay, all right, Ashutosh. Thank you so much for joining us and for talking to us about what are the big tailwinds playing out in the banking space and why the street is optimistic. But before I let you go, if you can give us the bottom line of whether or not one should accumulate banking stocks even at these levels, would you say it's a yes?
Yes, we should accumulate, because if you look at Nifty earning, the biggest contributor for the next FY24 will be the banking stock, all across that. Whether to look at private or public, they will be the biggest contributor. The growth is coming, very strong loan growth, and benign credit cost will help them to deliver very good numbers. So the sector which will deliver the best earning growth will deliver the best stock return also, in my view, at least at this point of time when the market is fairly valued in the terms we are trading at 22 times average to our historical valuations, long-term historical valuation. So in that way, we are we clearly see that the banking sector will continue to lead the market at least for the next 2-3 quarters, and post that probably some other sector may come and take over that part.
Okay, thanks then, Ashutosh, for taking time out and chatting with us in detail about the banking space. All right, moving on, let's bring on board our technical analyst for the day. Gaurav Bissa from Incred Capital is here with us. Morning, Gaurav. Want to get in your view as well on banking space, and we're getting a lot of queries, not just for banking, but the entire BFSI space, but a lot of comments I've seen on Canara Bank especially. So talk to us about Bank Nifty, the way it has run up, and if you could also give us some update on Canara as well, specifically because a lot of comments coming in for that.
Good morning. If you look at the Bank Nifty, we witnessed a very strong breakout above levels of 41,800. It had an interesting pattern. If I'm not wrong, a few weeks back, we made a dash towards 41,800. We had a very strong correction from those levels, and then we again saw a breakout happening. And we have seen that the Bank Nifty has been outperforming. So it has been sluggish till the time it was below 41,800. But once it gave a breakout, we witnessed very strong outperformance compared to Nifty index. It can go towards 43,000, 43,200. We have seen the breakout. This breakout is giving targets of 43,000. And this is what we suggest to our clients at 41,800. It can go towards levels of 43,000. As far as the PSU banks are concerned, they have seen multiple breakouts, whether we're talking about daily, weekly, or even monthly charts. Canara Bank is also interesting. If you look at the daily and weekly charts, we have seen very strong breakout sort of happening in Canara Bank. But if you look at the monthly chart, It is on the verge of fresh breakout. I'm not saying it's weak, but till the time we don't see a breakout sort of happening, I would be a little skeptical. Again, like I said, the structure is positive, but if you look at monthly chart, the breakouts are just about levels of 315. So a monthly close about 315 can result in a 10-year, 12-year falling trend line breakout. And we can see the stock starting fresh trend. So on that perspective, you can have a multi-year rally coming in Canada Bank. But as far as the entry point is concerned, either I will add on declines or I would wait for the breakout to unfold.
Okay, all right, understood. I hope our viewers have taken note of that as well. Gaurav, few stocks that could be in the limelight today. The big name that stands out is Bajaj Auto. LIC has sold about 2% stake, close to 56.7 lakh shares in the company via open market transaction. So now, after this selling of stake, LIC's shareholding in the company is reduced from 7.2% before, now to 5.2%. But let's talk about how the chart is looking for Bajaj Auto. It's been a good year for most auto companies, especially OEM stocks. But from these levels, where do you think Bajaj is headed?
See, auto companies have done quite well, but the likes of Hero Motor and Bajaj Auto, they have underperformed. If you compare that with Eicher Motor in the two-wheeler space or TVS Motor in the two-wheeler space, we have seen much better performance and very strong outperformance throughout the last few months or so. If you look at the structure of Bajaj Auto, I am not too bullish on the name. There's a good hurdle at levels of 3,800. On the other hand, if you look at the daily charts, it's given a breakdown from a rising trend line. So I would not give a short as such. You go ahead and create fresh shorts because you've seen the downfall already from the breakdown area. But the structure remains bearish. And any decline, any rise other towards 3,750, 3,800, I think that will be again met with fresh solutions.
Okay, and another stock, a big talking point as far as the Lal Street chatter is concerned, is Paytm. Bank of America Securities, Morgan Stanley, Societe Generale, they've all picked up close to 2.8% stake in Paytm. SVF India Holdings has at the same time offloaded close to 2.9 crore shares of the company for 555.7 rupees apiece. So now these big names have entered the counter while one of them has offloaded about 2.9 crore shares. But what should one do if they have bought Paytm? I mean, clearly if you've bought it in the IPO, you are incurring big losses. But even for those who have been buying and selling it off from a trading standpoint in the last few months, what would be your advice? Should one tread with caution here, or is it a good time to dip in?
For somebody who has already bought, I think it's approaching the important support area of 500. So they can hold. But if somebody wants to pick the stock at this point in time, I will say wait. When there's such a major fall happening in the stock, and the stock has done nothing. In after a jump from 500 odd levels, it went towards 750. It's come back to 500. So what this basically means is the structure has still not improved much. I was also quite bullish on the name at one point, but it has not shown the performance that I was expecting. In such cases, it is always better to buy at high levels. So take example of Zomato. It went towards 40 to 43, if I'm not wrong. And after that, at that point, even we advise our clients to stay away. We started being positive only about levels of 60. So we did not start buying anything, even a single share when it was at 43, 44, 45, and 50 for that matter. It is always better to miss out some rally, but wait for confirmation so that in such names, when you don't know when they can move down by 20-30%, it becomes really very difficult. So that is why timing it becomes very important. And this the case with Paytm remains the same. Let it see some stability. Once we see some stability come into the name, then look for buying. At this point, I would avoid fresh buying. For others who have already bought, keep a stop loss of 500.
Okay, all right. The next stock I want to bring out is Ultratech Cement. Now they've commenced operations at a third Birla White Wall Care Putty plant in Rajasthan with a capacity of 4 LMT per annum with a cost of 187 crores. And now their total capacity for this particular segment has gone up to 13 LMT per annum. If we look at Ultratech stock as well, very smart rally in the last 1 month. From its recent close of 6,080 odd rupees, the stock has added more than 700 last 4-5 weeks. Is that trajectory going to sustain, Gaurav?
It is expected to sustain, and this is one stock that is on my radar. I uh, expect this to outperform the entire cement space. But for me, a close above 7,000, 7,020 is of paramount importance. There will be an inverse head and shoulder breakout once it gives a close above 7,000, 7,020 level. And that is the trigger we are looking for. We have started flagging off to our clients, but till the time it does not give a close, we will not be initiating a trade, because if there's a resistance or if there's a failure to break out the crucial resistance mark, it generally leads to a good amount of fall. So the risk reward would not be that favorable if you buy at 6,800, because then your stop losses will be smaller, but the chances of making money will be smaller as well. So on that perspective, 7,000 is the key level to watch out for. Once it closes above those levels, it can move at 10-20%.
Okay, all right. And the last stock I want to highlight for, as far as stocks and news is concerned, is Blue Dart. They've launched 19 plus retail stores across India. They're celebrating the 39th anniversary as well. So it's part of their overall expansion plans. Now, these stores are located in 14 states across the country, the likes of Uttarakhand, Uttar Pradesh, Maharashtra, Punjab, Rajasthan, Andhra Pradesh, etc. Especially tier 2, tier 3 towns is what they're targeting as far as their expansion strategy goes. Let's talk about Blue Dart. Last 1 month when the market was looking up, Blue Dart stock hasn't done much. In fact, it has only given up some of its gains. So talk to us about where Blue Dart is headed.
It is, I would not say it is looking weak as such, but at this stage, I think one will have to do two things. Either keep a view of at least 1 year, or you wait for a decline towards 6,500, 6,600. If I look at daily, weekly charts, and if I look at 21 exponential moving average, there's a very strong support, and it has a history of respecting those levels. That comes around levels of 6,715. So any declines towards 7,000 probably can be bought into. You will have to keep at least 1 year view, and then you can look for levels of even 8,000 become quite possible.
Okay. Let me quickly address some of our viewer queries and comments as well that are trickling in, Gaurav. The first comment is from Prabhu. He wants your advice on Divi's Labs for the long term. November clearly hasn't been a good month for this one. It has come down about 500-600 rupees on the downside. Talk to us about the long-term scenario for Divi's, and is now a good time to enter?
See, it's a tricky question as such, because if you look at the weekly charts, it is in the downtrend. We have seen it has history of being a very strong outperformer, but off late it has not been doing so. I would give it some more time. If you have long-term horizon, if you miss out on certain percentage points, it is fine. So either you wait for any declines towards level of 2,800, 2,850. That will be a decent level, decent support area to buy. Or you wait for a confirmation, but right away I will not buy.
Okay, fair point. The next query is again on a cement stock. This is from Surya Mahapatra, and they want your advice on Ambuja Cements. It's not very far from its 52-week high, but 570 odd rupees, do you think is a good time to invest, or should one wait for further or a meaningful dip to come back?
The outlook remains the same. It is positive, but like we talked about Blue Dart, two things. Either you wait for a breakout, which will happen once it gives a close sustains above 595, you can buy at those levels, or you wait for a decline. It's moved up very sharply from 500 to around 580 in a very short span of a few weeks. So you wait for a decline, probably around 540, 550 is where it looks again interesting, not at the current juncture.
All right, okay. The next query I want to flag off is from Vignesh. He wants your sense on BPCL. He's targeting the, eyeing the stock for the next 2 months. So how is it looking in the near term then, BPCL?
I will say avoid. It has been forming lower top, lower bottom, which is characteristic downtrend. Even with positive divergences on momentum indicators, it has not been witnessing a rally. When there are too many ifs and buts coming in the structure, I think it's better avoided. There are many other names which can give more confirmation. So don't buy the OMCs at this point. Look for the stocks.
Okay, all right. Couple of queries coming in from NBFCs as well. One on a large cap, which is Bajaj Finserv. Sanjay Chaudhary has sent us a comment and he wants your advice here. The other one is from Rajiv and he wants your view on Ujjivan Small Finance Bank. How are both of these looking on the technicals?
So Ujjivan Finance, as a disclaimer, we had come out with the report for our clients as well. We are looking for targets around 33, 34. It's given a good breakout, falling channel breakout on weekly charts. Trend reversal is seen. So on that perspective, the stock is looking quite robust. One can buy. We have given a stop loss of 23.5 on a closing basis, and one can buy here. Or if somebody has bought, can keep the stop losses. As far as Bajaj Finserv is concerned, currently the stock is not on my radar. If you look at the daily charts, the rally that started from 1100 levels at the straight levels, so it's on the verge of giving a triggering pattern of double top. So the supports are a little lower. It's around 1600 at the critical juncture. If it breaks, if it gives a close below 1600, the structure will become very, very weak. So in my opinion, again, this is a stock that should be bought only at higher levels. Once it gives a close above 1815, 1820, only then will I buy. Till then, it's an avoid for me.
All right. Okay. The last query very quickly then. This is from Vani and they want your view on Cummins India. Stock has done pretty well this year actually, currently perched very close to its 52-week high. Do you think now is a good time or should one wait for a dip?
One should wait for a dip. Even the bigger breakouts or multi-year breakouts happened at the area of 1260, 1270. The stock is up 120, almost 10% from those levels. So the risk will not be that skewed. And if you buy here, I can say there's a big breakout, you can buy at the current point. But once it corrects 8-10%, people will panic, right? So if you can absorb 15-20% shocks, you can buy at the current juncture, else you wait for decline.
Okay. A lot of queries actually coming in for banking names. Of course, we did discuss banking sector in detail as far as the fundamentals go. But Gaurav, any of these names from the small cap, small and mid-sized banks that hold out for you? I mean, I'm getting a lot of names like RBL Bank, Karur Vysya in the comments. So any of these mid and small sized banks look good?
So again, as a disclaimer, we came out with a report on RBL Bank around 137. It's near about those levels, and we are aiming for targets of 160 to 180. We have seen falling trend line breakout happening from 2019. The trend reversal is quite evident. So the structure remains positive. Volume participation is quite interesting. So everything looks well. RBL Bank would be on my radar. Beyond that, as I said, Ujjivan Small Finance, you can talk about consider it as a smaller name, small cap name, and this one will be a mid cap name. Beyond this, we are not looking because many of the names have moved up. We were quite bullish and we had recommended our clients for KTK. That has also moved up. We had bought DCP that has moved up. But once we have booked profits, we have not entered these names again. They have moved significantly higher. So the risk reward is not favorable at this point.
In fact, you also have picked out two banks as far as your picks for the day are concerned. So why don't you tell us what they are?
So I have not picked up mid or small cap. I have picked up large cap names because that is where the stability lies. So SBI is one name. We talked about Canada Bank, but the SBI structure is also very interesting. It has given a breakout from rising channel. Volume participation is quite robust. After the quarterly numbers, it made a retest of the breakout area. One can keep a stop loss of 580 play for targets of 630. And there's a very strong breakout on monthly charts on Axis Bank. One can keep a stop loss of 820 play for targets of 920. Again, as a disclaimer, we are advising our clients Axis Bank, but the targets are not 920. They are much, much higher because the breakouts on the monthly chart. So if somebody has a 1 year, 2 year view, you can expect supernormal returns in Axis Bank in next 2 years.
Okay. All right. On that note, Gaurav, thank you so much for joining us and for helping our viewers out with so many queries, especially with a focus on banks, NBFCs, and several other names from the broader market as well as the benchmarks. So with that, It's a wrap on Morning Trade. Thank you for tuning in.